Today I was going to try something new and just do a wrap up, and these are trades that I'd been stalking throughout the day, some of which I take, some of which I don't, but I want to maintain a journal of these patterns, and I figure what better way to do it than with a video journal where other people can also learn from it, but also it forces me to maintain a discipline of putting it out there. So today, so it's going to encompass a lot of different markets. Today, the two trades I came into today thinking that had good potential were this one here. Let me take this out. We want to focus on bars, so let me get everything else out. This is natural gas, and given that it tested higher yesterday and failed and left a big red candle, my thought was if we get a break below the low of this candle, then we could get our 4x setup. And I was watching it overnight on my phone. I don't trade from my house. I have to set some boundaries. We broke down below on the 7 p.m. bar, and we put in a very clean A, B, C up. And this right here would be your risk bar. And the risk bar happened at exactly 1 a.m. So there seems to be about a 5-hour lag between when you get the trigger and when you get the risk bar. And, I was not awake at 1 a.m., but by this morning, this is a 7 a.m. bar. We'd made, this trade had made over 6R, and it's back down to those lows here. Another thing I was looking at was the Australian dollar, because we had a very similar type setup. This is a very strong setup bar. Left a big tail, big and red, closing near the lows. So when this went down, I figured, okay, there's a setup, same kind of setup. So this time it happens to be on the 15-minute chart. And if you notice, the first violation was extremely minor. It just happened right here at 5 p.m. on the Globex reopen. And then, you can count these bars on your time, but here, this goes clearly to here, this goes clearly to here, and this went clearly to here, setting up a risk bar of this. So that would have triggered and then gotten stopped out right here at 8:15. So this was 7:15, this was 8:15. Now, once it basically just tailed, stopped, and came back, this became the new risk bar. And using this risk bar of 73.49 down to 73.32 and a half times 4, 66. 7332.5 minus 66, 72.66 and a half, which we handily achieved. Nope, looks like it took till about here. So make sure I have those numbers right. Yep. So if we were to draw a rectangle, 4R was achieved down at about 66 and a half. So almost in the morning, but then later in the day. And here, something to note, if you put up an RSI on this 5-minute, as we made one low here, basically as we made 3 lower lows here, we were making higher lows here. It's a little hard to see. Let's see. This one is 24.54, 25.06, 26.55, 26.42. Oh, and then this one, way up here, 37.31. So I guess if you consider this your second point, and then you consider this your third point, and then I guess I guess this would be your first point, somewhere in here. We had rising RSIs with falling prices, so that would have been assigned to cover right in here. But of course, that's 2:45 in the morning. I think when I saw it was 7 or 8 in the morning. So we had two setups that returned over 4 times your risk in one day. Now, intraday, there were ones that did even better. And that's part of that's just a function of it being a crazy market that we're in right now. But this here is gold. And this is basically a microcosm of your cup and handle pattern, that IBD, William O'Neill, Minervini, Ryan, all those guys talk about. And they typically talk about this on a daily time frame with equities. But I've noticed the exact same pattern happens on a short time frame in both equities and commodities. And the key elements to this pattern, so here we have to start adding a few things because there are other parts to this pattern. And volume is one of the important things. You do want to see volume dry up a little bit in the handle. So if we put a moving average of volume and use something like a 30 period simple, you can see that in the handle here, before we broke out, we had a little bit of volume dry up, right? So remember, this stuff doesn't exist yet when we're making this decision here. And you had a couple of low bars. You'd probably want to see more low volume, but it checks a box. And then the other thing we want to see is volatility compression. So I look at a 3 period ATR over a 20, and you can see that down here we got down to 0.654, and call it 2/3, call it 0.70, somewhere in there is where you want to pay attention to it. So I wonder if the indicator itself can draw that. I'll figure that out on my time. But anyway, we got a dip in the volatility down here to 0.65, 0.70. So that does tell you there's volatility compression going on here. And the way Minervini describes it is all of the sellers that are trying to sell are completely drying up, and the buyers are doing their best to buy as much as they can without ramming the price up. So you end up with this little piece of time here where the volatility goes down because the buyers don't want to buy and there are no sellers to sell. And then at some point a stampede starts because all the buyers are looking at each other and realizing that that's who I got to beat. So what helped me catch this move in gold is also noticing that in the handle we had an extremely clean ABC. So blowing this up so you can see it, this is your risk bar. It's a very tight risk bar. 2022.2, so about $2.50 risk bar. And don't need to tell you how far we went. We went up to 2078.8. 22R on that risk bar. Not joking. 22R. I was out at 4R. But that is the power of this little pattern. This isn't our typical overnight change of trend. This is the volatility compression pattern. And I would much rather make 10 or 20 times my risk in one day than do this on a daily chart and hold the stock for 20 days, to make 30% on my capital. But I have to give credit where credit is due. This is, the pattern that's been around for a long time. I've, studied it most closely through Minervini's work. But the exact same pattern was in oil. Maybe not identical, but it fired afterwards. So what was nice is I was able to take my gains from gold and compound them. if you do it that way. So here, not the same, but around that period of time you have this right here. Is that the right time of day? 6:55, 7 a.m. I think it was this that I was looking at actually. So we'd already broken there, and now we were kind of looking at this over here. So I was looking at this cup and handle, you know, or at least just I guess not as clean as the picture was in gold. I wonder if the pit chart looks any better to show the pattern clearer. No, it does not. So again, this was the pattern. The idea is just that you have a cup, you have a bunch of higher lows, you get to a point where the volatility is compressing, and down in here, we got to 0.65 again on ATR 3 divided by ATR 20, right on this bar before we took off. But I was actually watching it as an ABC pattern, and I looked at this A, this B, this C, and I believe the C did not even go lower than the A, so that makes it a little non-traditional here, 402, 393. But I used this as a risk bar. You could have equivalently used this as a risk bar right before we broke out. You would have had your buy stop above here with a stop below here. And again, that only works because you've had volatility compression. But either way, using this as a risk bar of 70 cents, we went from 125 under to 120. So call it $4.50 on 70 cents is a good 6R right there. So those were the best patterns of the day. Just a couple of other little things that we've been talking about on the S&P 500. You know, this is oops, wrong one. This is again, you know, what I call the bald man pattern, where it's either a 2 or a 3 bar pattern where you have an impulse and then you have, you know, a couple of rest bars that stay well within the upper half. And you know, again, talking about significance, someone had asked a question in on one of the comments, and I'd mentioned that there's more significance when one of these bars crosses from below to above, either, you know, 30, 50, or 70. This is an example where you crossed from 30 to, you know, from below 50 to above 50 on this bar. So when that bar has that characteristic, I take it a lot more seriously when you get this little tight pattern, and we did get a nice little continuation push up there. The other little thing that was nice early on was in the Russell 2000, when we started rallying, this rallied the best, you know, in terms of getting closest to its previous day's high. And right towards the end of that rally, we had what I call a very tight 2E. You know, you have this, you know, we have our pattern, our ABC pattern, and I believe again the C did not touch get below the A, 87.50, 85.90. So I usually am looking for it to get below, but things are acting very strange today. You know, so we have this very recognizable pattern here, and we got a break. And, you know, a lot of times, you know, a wedge, I'm sorry, I won't call this a wedge, a symmetrical triangle like this is your wave 4, so you get your final push. And I was kind of hoping we didn't take this out. You know, I had no idea. I initially thought that we would take this out, and I got very lucky to exit just a few ticks below the high there. But the reason I don't want it taken out is this now sets up for tomorrow, where I'm going to be keeping an eye on this, and if overnight we take out this high, I'm going to look for our little bitty ABC down in whatever time frame seems appropriate, again, depending on when we take it out. If we take it out in Asia session, probably look at a 30-minute, and, you know, it might happen over Europe. If it happens over Europe, then I'll look at a 15 or 30, and it'll probably happen around 7 to 8 a.m., giving, you know, U.S. hours a chance to get in on it. So anyway, that is my market wrap up for March 8th, 2022. In terms of what I'm looking at tomorrow, if copper can take out this high, we'll look for our Forex trade. If the Australian dollar can take out this high, we'll look for our Forex trade. And notice neither of these are particularly great setup bars. The best setup bar is this one right here, the Russell. If the Russell, and it ought to be very similar to the S&P. It ought to be very similar to the S&P and the NASDAQ. It's just that the bar looks a lot better on the Russell. So that will be my choice trade if we get that. Other than that, crude would really have to drop below, I would say about 115 to then look for a retracement back up. And another thing you could do, if you plan to stay awake all night, we have a very clean A, B, C pattern on the 15-minute. So below that is pretty much a U-turn. And I bet if we take out 115.61, I'm looking at the wrong month, CLEJ2, same thing, same pattern here. If we take out 119.62, I bet we get $1, no heat. Call it 118.62. I'll follow up on that tomorrow, but that's how small the dollar looks on this chart. So again, it's the bar structure that sets this up, and we know that there's a very clean ADC. Maybe that means this wants to go make new highs. I don't know. Nobody knows. I just know that if it takes this out, it's probably going to get a little bit of follow through. Could be a lot of follow through. The logic behind that, of course, being that this is very overstretched. And if you look at the 2-period RSI, yeah, this is our third push here. We've got 94, 98, 95. It's fairly overstretched. So I guess the day wouldn't be over if I didn't give you an example of an RSU that played out today. If you look at something like GDX, the gold miners, coming into today, we had, this had a 97, RSI2 of 97. This had an RSI2 of 98. We gapped up and we didn't get a play yesterday. So we gapped up again today. And, again, with this particular trade, we're looking for the breakdown below 70. We got one here, but no confirmation, right? This is 8:30 when the market opened. We got one here, no confirmation. And then we got one here, and we immediately got confirmation on the next close. So this would have been our risk. And I didn't like this much just because that risk is fairly wide. But if you look at everything and scale it in terms of risk and reward, 40, 26, 39, 62 is 64 cents. And, down to the low of the day, 37.89 minus 39.62, 67 cents. Yeah, 2.5. So you got about 2.5 times your risk. I guess being wide maybe could have gone for a target like this previous day high, or just a target that was, I believe, actually 2R is shy of that. 26 plus 38, $62.24, 38.14. Okay, 2 R's down to here. So yeah, playing for previous day high was probably 1.5. You did get 2, and making twice your risk, in a methodical, repeatable way is nothing to sneeze at. So anyway, that's just a little bit of reinforcement, something. So as you learn these different filters, you learn these different ways to view the world. When you start watching price action on these different markets, you're going to start seeing all of this. And, obviously I've been doing it for 20 years, so I see it when I'm sleeping. But, the goal is just to find the framework, the mental framework that works for you, and then reinforce it with a lot of practice. So anyway, if you like the video, give me a thumbs up and subscribe, and feel free to ask me questions. And that's it for the wrap up.